welcome back. You're watching Live from Paris. I'm Tom Cath. Let's get the day's top business news for you now. Marcus Carlson is here with us in the studio. And Marcus, you're starting with a newcomer to the New York Stock Exchange. It's China's answer to Twitter.
Yeah, the Chinese social network Weibo has listed its shares on the Nasdaq in New York. Weibo introduced its shares at a price of $17 a piece, which was lower than many had expected. Still, the initial public offering values Weibo at $3.5 billion or thereabouts. Weibo is the 7th Chinese company to list in the United States this year, and there's more to come. Delano D'Souza brings us more now on a firm that's relatively unknown in the West, but a household name in China.
It translates as microblog, and with Twitter's ban in China, Weibo has filled its void. The site boasts an average of 61 million users a day. In March alone, the company said it had over 143 million users versus an average of 241 million for Twitter. The company, soaring popularity with China's population with over 600 million online, has also hit some speed bumps. Growing social media regulation by Chinese authorities since September have forced users to switch to alternatives like WeChat, where posts can remain private. The company's revenues tripled to over 188 million versus 664 million for Twitter in 2013. Weibo's listing is seen as laying the groundwork for another Chinese tech IPO. Alibaba, the world's largest online retailer, looks set to list in the United States. The company boasts of 500 million users on its Taobao marketplace and is partly owned by Yahoo. It's expected to be the largest the tech industry has seen since Facebook went public in 2012. A record number of Chinese technology companies are expected to list in the United States this year.
Now, as we have been reporting in the last couple of hours, Russia, Ukraine, the EU and the United States have agreed on a deal to de-escalate the Ukrainian crisis. Earlier, though, Russia's President Vladimir Putin set a one-month deadline for Ukraine to start paying its gas bill. Putin was speaking during a question-and-answer session on Russian television. He said Gazprom would demand upfront payments from Ukraine in May unless there's progress. The Russian state-owned energy giant says Ukraine owes it $2.2 billion for previous gas supplies.
We will wait a month. If in a month, in the next month, there won't be any payments, then in accordance with the contract, it will change to a prepayment system. What does that mean? Ukraine will have to pay us a month in advance, and we serve as much gas as they pay us for.
Meanwhile, the European Union says it's willing to hold talks with Russia and Ukraine over energy security. The president of the European Commission responded to a letter sent by Putin last week. José Manuel Barroso said the EU is willing to accept a Russian proposal for three-way talks. There are concerns that Russian supplies to Europe will be disrupted if tensions escalate further when it comes to the gas angle of this story. Barroso also called on Russia to respect contracts and not use gas supplies as a political tool. OK, let's take a look at the stock markets next. In the United States, shares there have been trading higher in the wake of the agreement to de-escalate the Ukrainian crisis, but shares, they aren't rallying, so investors are still a little bit trying to make out what to make of this deal. The focus is on earnings season otherwise, with Google and IBM coming out with disappointing profits after the bell on Wednesday. On the other side of the coin, we've seen better than expected results from companies like PepsiCo and also from the banking sector, and we're going to take a closer look at that in just a moment. Let's talk you through the European close first, though. The Ukraine crisis put pressure on stocks early on. Towards the end of the trading session, though, shares got a boost as the US opened up. In terms of corporate earnings in Europe, Germany's SAP posted lower than expected quarterly profits, with the firm blaming a strong euro, and that put pressure on shares earlier. Still, though, all of the main indices in Europe in positive territory. As I said before, let's take a closer look at some other earnings that we're watching for you. Profits at the American bank Goldman Sachs slipped to under $2 billion in the first quarter. That's 11% less than during the January to March period in 2013, as the bank's bond trading slumped. Still, earnings were better than many analysts had expected, as revenues from investment banking rose. Goldman's rival Morgan Stanley also reported better than expected quarterly results, earning $1.4 billion during the first quarter. Like Goldman Sachs, General Electric beat expectations while reporting a fall in quarterly profits. The American company earned $3 billion from January to March in comparison to $3.5 billion last year. Present worldwide, GE makes everything from aircraft engines to fridges, and it's widely seen as a bellwether. It says its European operations reported better than expected earnings in the first quarter. And drink makers are feeling the pinch during a crackdown on corruption and lavish gift-giving in China. France's Rémi Cointreau says that profits this year could fall as much as 40% as its cognac sales in China are slumping. Rémi's rival Diageo also saw its sales tumble in the Asia-Pacific region in the first quarter. The British maker of Johnnie Walker whiskies and also Smirnoff vodka reported a 19% fall in sales in Asia. Okay, we're going to wrap up with this. French competition officials have dealt a blow to Switzerland's Nestlé and its subsidiary Nespresso France. The company has agreed to share technical details about its future Nespresso machines with rivals. Officials hope it'll increase competition in the market for coffee capsules. Nespresso France has been accused of changing its designs to squeeze rival capsule makers. France is one of Nespresso's biggest markets, accounting for 25% of global sales. Okay, we're going to have to wait and see whether that actually leads to lower prices when it comes to coffee capsules here in France. And with that,